Good morning. It's Thursday, May 1st. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So checking in on the market, some of the key drivers here for today's session. But before we get started, let's look at a couple important developments from yesterday's session because it really set the framework for where we're at today. So looking at ADP payroll data, which came out yesterday morning, this is the private sector payroll data. Came out at 62,000 versus 125,000 jobs expected. Much weaker than expected. And one thing that we've been monitoring is a deterioration in the labor market. Now we saw GDP come out and it was its first contraction in 3 years, coming in at negative 0.3%. So the markets, they edged lower and gold had retraced much of the sell-off here that we saw from the previous night's session. Now, something that we're going to want to note and keep an eye on is how the economy develops with the tariffs and everything else going into second quarter release GDP. Because remember, technically, when you have 2 quarters of contraction, that's when you get the market technically and the economy technically in a recession. So we'll want to see what type of rhetoric, what type of headlines and things, and the impact on the Federal Reserve, because after that type of data came out, the expectations for Fed interest rate cuts had also skyrocketed back upwards to about 4 cuts expected this year. Now, going on a few hours into the session, we saw the PCE, and that's the Fed's preferred inflation gauge. Well, it came out much lower than expected. So what that did was it created that V-shaped recovery in U.S. equities yesterday. So the market rallied and gold gave up some of its gains. Remember, a lot of the participants in the gold market here have been rotating in and out of equities, putting on that safe haven trade, then coming out of it and going into a risk-on environment. We're seeing that in like Bitcoin, which is up $2,200 in the overnight session and starting to break out over a 4-day kind of bullish flag pattern here, getting back over that 97,000 mark. Now looking at the markets overnight, so we've got big moves here in the equities. So stock futures, they are solidly higher. We've got guidance from Microsoft and Meta that's reassuring the narrative that big US tech is intact, and there are also some positive signs on some trade deals here with the US and with China. So Microsoft beat estimates showing strong demand growth here in its key cloud business. Meta also topped its estimates and raised its full year CapEx forecast, saying it's going to continue to invest in AI. I don't know if you have ever seen the Meta glasses. I wear those all the time, the sunglasses, and I've got the transition ones, and they are absolutely fantastic product here, and they're continuing to develop that out. So looking at the S&P 500, we're up over 1%. That's 65 points at 56.52. Kind of that next key level of resistance on the U.S. equities is going to be about 5,700. Many people that I'm working with closely have been long U.S. equity futures, and when the market comes up these resistance points, what they'll end up doing is look to lift some of those futures and then look to play another downturn in the economy as the tariffs really take hold and the deterioration in the labor market potentially continues to develop here. So we'll look at some June puts, some September puts on the US equity markets. Not a recommendation out to the public, just some insight as to what I'm going to be doing here with many clients. Looking at the NASDAQ, back over that 20,000 mark, up 344 points. That's a 1.75% gain here. You look at the treasury markets, just slightly lower than the 10-year yield, down 0.3 of a basis point at 414, and 10-year futures up about 8 ticks at 112.15. Looking at WTI crude oil, that's really been taking it on the chin here, down $1.65. That's almost another 3% move lower. Now, something to note here on a lot of these markets, and specifically the gold market, is that many Asian and European markets are closed for a Labor Day holiday. And I think that's where the trigger had occurred in the gold market, the liquidation. So you look at the speculative demand in China, the central bank buying, those have been 2 main drivers in the gold market. And if you look at Goldman Sachs, they released a report this morning saying that China liquidated what it bought last week ahead of the Labor Day holiday. They asked the question, would you hold any kind of length of extensive amounts of gold positions going into 4 trading days in this market that you can't hedge in any capacity? So they saw total onshore positioning now about 5% off of its all-time highs. And China's having a disproportionate impact on the price because they execute during an illiquid part of the day. So that triggers a lot of ex-China CTA selling. So what I'm trying to tell you is that China's been the main buyer. and all of a sudden they're on holiday for 4 days. Well, they go on holiday, they're going to liquidate many of those positions coming into that holiday because of the fact that they are completely handcuffed and unable to do any kind of hedging going forward. So that's where you see the liquidation pressure come into the gold market, into the silver market, and anything that's kind of China related here. Now, looking at some things going back to the US equities, we're going to have another big test here as far as can we get through that 5,700 mark, and it's going to come after the close when we have Apple and Amazon report. Now, looking at economic data, because we want to really continue to monitor that, because we're starting to see some of it slip here, specifically with GDP, consumer confidence, inflation data, things like that. So we're going to have headline ISM manufacturing PMI, and it likely retreated back into further contraction in April as the demand kind of waned out here for a lot of manufacturing products. So they expect that survey to show that producers are facing accelerated input costs here, and they're likely going to try and pass this on to the consumer, and that's going to take that demand a bit lower. Now, tomorrow we will have the April jobs report released, and we'll really want to look at that because that will also set the stage going into the weekend. Tariff news here, Trump said there's a very good chance that they're likely to strike a deal with China, and Chinese news outlets had indicated that there was some dialogue between the US and China. Now, we've seen great volatility in the markets when China was denying those claims before, but this is now Chinese media saying that there is a discussion that's taking place. So you look at the gold market here in the overnight market. So 32.32 is where we're trading as of this recording. That puts it down about 2.6%, well off of the highs, which is 3,300, and well off of that range that we've been looking at and monitoring. A lot of people have been looking to add positions down at that first major level of support, which was going to be right around that 32.65 to 75 region, and then below that your next critical level of support is going to be right around 32.02. So what you want to look at here is where the market had ran into resistance, finally broke through it, traded up to all-time highs. We come back down at a critical level of support, and that was the 4 days where we saw really the market ping-ponging in about $100 range. It was the Chinese buying coming in there, a lot of the ETF buying coming in, and then selling out on any kind of rally. And what you have is swing traders coming into the market. Now that China's on holiday, you get the breakdown through that support level, and you start to eye that second level of support right around that 32.02 level. So you look at gold prices, they're really dropping also to that 2-week low because of the trade talk progress between the US and other nations. So it reduces some of that tariff safe haven demand. And again, they go into US equities and they start to chase that market higher. Now, looking at gold, it is still up over 20% this year, and it is still just hovering over that 3,200, 33, 3,400 level. So we are in unprecedented territories. You look at the ETF flows. Well, ETF flows continuing to see liquidation, and I anticipate that they're rotating into US equity ETFs. So you get exchange traded funds. They cut 150,000 ounces from the previous trading session here, and this is the 7th straight day of declines, the longest losing streak again since we saw the election back in November. Now, if you look at silver on the flip side, a lot of people looking at the dip buying in the silver market here because of when you come out of a situation like a COVID, like a 2008 crisis, like this tariff crisis, many times you start to see the economies put the afterburners on, and they have a sense of relief from everything that's going on and some clarity as far as where we're going in the economy, and that's where you start to see some of the silver flows come in. So ETFs added 3 million ounces of silver holdings in the previous session here, and this is the 3rd straight day of growth. So you look at the year-to-date percentage change here for the two ETFs we're tracking. Gold up 7.3%, so that's another downtick from the previous highs. And then you also have silver up 2.8%, so that's a big jump. So what does that do? It takes the gold-silver ratio down just a tick here, 99 to 1, and the key level to watch is that April 23rd low at 97 to 1. You look at the other outside markets like copper. Remember, we talked about the Chinese manufacturing data coming off, and that's where copper futures were down massively, down about 30 cents here yesterday, 35 cents. Well, we're getting some reprieve here today, up about 5 cents at 466. That's a 1% gain here. And you have platinum futures holding that 960 level. 960 to 980 have been some critical levels of support. We finally broke 980. Now we go down to that second level of support. It's important to really identify these on different charts here. So you do have copper prices coming in a bit higher here as you get some progress on the trade talks here. So that can help bring back some of that global demand growth, and you'll also see copper demand rise. Copper prices, they did fall about 6% in April. It was one of the worst performances on a monthly basis since mid-2022. Again, it's signs of the trade war hurting economies and things like that. Now, one of the markets that's really been breaking down here last few sessions kind of ran into this bearish flag pattern and now breaking down, testing some recent lows and some longer term lows is the crude oil market back below $60, back below $57, trade at about $56.59 last year. So the high in the overnight range, $58.46, low $56.39, down about 2.77%. So it's signs that Saudi Arabia, they're leading OPEC Plus, and they're trying to get this alliance to increase output broadly and evenly. So you're seeing crude oil prices, they fell about 16% in April. So basically OPEC trying to pump a little bit more than expected when you come into this questionable demand here because of the economy and things like that, as reflected in GDP, as reflected in Chinese factory orders. So if you have any questions, be sure to reach out, be sure to register from some of our research here and some of the links below. We offer a lot of different things on the agricultural markets, the livestock. We write up an energy report, an S&P 500 report, and of course a metals report every single day. You can register for many of those things and additional reports such as the chart pack, which we'll be updating mostly on Tuesday, Thursday, Friday is when we're looking at updating and sending that one out on a reoccurring basis. So remember, futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck and good trading.